Hey guys, I hope you're doing great. Let's start with the euro against the US dollar. Last week, the price respected the level we marked here. It traded around this resistance. It dropped. Downtrend is intact. Now it's approaching the key level of support we already have on our charts. The next area of support is down here in case this candle closes below. And then if it follows through, the next level of support is down there. So far, this 4-hour chart, it points down, and on the lower time frames, we can find some trades to trade with a trend. On the other hand, if the price changes direction and it goes up, the first key level of resistance is the Wednesday's high right here. And the other one, it's right there. But we think that, I believe, based on this chart pattern, that the market has more room to move to the downside. Next one, sterling against the US dollar. This is a 4-hour chart. After the break of this downward trend line, the market is trying to retrace around, let's see, that's 50% based on the Fibonacci retracement, but already retraced last Thursday, the 61.8. If it's going to be the beginning of a new uptrend, the buyers should step in around this area to push the price up. Now the market is trading in the no man's land, in the middle of nowhere. We need to wait to see if the price will reach its support or it breaks above this resistance. But of course, if you want to do lower time frame trading, there is a support right here to use it for potential some bounces or break to the downside. Next one, Australian dollar, US dollar. As we marked this resistance last week, the price respected it, it rejected and moved down. This one is not relevant anymore because the price went through easily. It means there is no key level of resistance. On this part now, on this part, if the price keeps lower highs and lower lows, as there is no break of market structure, we can see a further downward move. Next one, US dollar versus Japanese yen. 4-hour time frame, the price last week broke and closed below the upward trend line, and also this area of support, it flipped and became resistance. See how many candlesticks were trading around this area, then a bearish continuation candle pushed the price further. This gap, it's a good one, I can say. This one here, I think it's about 150 to 200 pips. How much it's here? 150 pips. We will see this gap getting filled at some point, sooner or later. The next area of resistance based on the current market structure, it's up there. And I'm not going to be surprised if the price trades all the way to the resistance before it turns to fill up this gap. But if we spot some reversal trends on the hourly perhaps, then we can lower time frames to find lower lows, lower highs and trade to fill up the gap. That's from the gap trading perspective. Next one is the chart of gold. All-time highs are non-stop with this one. It's, I think gold aims to reach the 4,000 this week. Let's see if it's going to be manageable. What I spotted last Tuesday was this long bearish candle compared to any other bearish candle formed during this impulsive uptrend. But the sellers were unable to push the price lower, and this shows how strong is the gold market. As we don't have a relevance for a new all-time high, every previous candle's high considered as a strong resistance, but that's not going to be a reason to sell the market. When you see an uptrending market, try to trade the uptrend instead of doing something else. On the lower time frames, you can find some pullbacks, retracements to go long on this gold. Platinum, it reached the all-time high. At this point here, we didn't see the sellers aggressive like we saw them here with a bearish engulfing followed by a long bearish candlestick. Here we didn't see anything yet. Let's wait. Maybe the price will break and close above this resistance, this all-time high, we will have more clarity. On the other hand, if the price trades lower, the significant support is this level here. US oil on the 4-hour time frame, the price closed below this key level of support around $61 per barrel. Then it closed above. I believe we need to see a higher time frame in this case to understand a bit better the bigger picture. So this level broke quite easily. I will delete this line. Previous week's high and previous week's low, it's here, close by to the support. If the price closes below this $60.37, the next key level of support, it will be down there around $56 to $55.50. Back on the 4-hour time frame, this is how it looks like. There are intraday resistance all the way up. In case you trade any time frame lower than the hourly chart, you need all this key level of resistance. There is no key level of resistance here. It's just the same move. After this one, the next key level is up here. Cooper weekly time frame followed this long bearish candle. The price retraced quite well last week. The middle of this candle usually considered as a strong resistance, but we need to back it up with a horizontal resistance formed by a swing high, which we don't see here yet. But on the 4-hour time frame, the price is in a strong uptrend. So if we decide to trade this market on a lower time frame, we have to go with a 4-hour flow, which is an uptrend. Unless the 4-hour changes, then we have to change bias. But for now, everything is bullish. This is the key level of resistance for now. There is an inside support right here. You can use it along with this trend line to find some bullish price action. Also, this, let's lighten it up a little bit, the background. Yeah, looks much better. Also, applying the Fibonacci, measuring this impulsive uptrend, the 50 and 61.8% retracement is around this level. So you can use that as well. Next one, Bitcoin. Don't look at all this mess here, are the positions I traded last week. Bitcoin rally, and I wanted to be a bit aggressive on that one, on the 5-minute chart and 15-minute chart mainly. We had an all-time high right there, almost 125,000, and that's insane. Nevertheless, the market is in a strong uptrend. Higher highs and higher lows all the way. Key levels of support is this one here. The next key level of support, if we're going to change market structure, will be that one there. If the price closes below, then this is the next one right here. Resistance, on the other hand, it's the all-time high. A break and close above this one will lead to a new all-time high. We don't have any reference for any other resistance because obviously that's an all-time high. And we have to monitor the charts to see what's next. Let's do Nasdaq. Maybe you are keen to trade the New York trading session. I don't know. But this is going to be a very day trading, so I will analyze that for you on the 15-minute chart. Follow this sideways move. The market, prior the New York trading session, it might gonna break above this high and to go further up, or it will go all the way down to fill up this gap. Now, because the market made a higher high and followed by a lower low, this shows a shift in the market structure from an uptrend into a downtrend. So if you ask my bias here, I'm more bearish than bullish because of this overall uptrend on the 15-minute chart. But if I want to trade short, I need to see a change of market structure here and the transition from higher highs and higher lows into lower highs and lower lows. Actually, it's something that I talk and I explain a lot in my course. I finally created a complimentary full-on trading course. It covers everything from beginners to prop traders. If you want access, just let me know and I will send you the information. I think that's all for today, guys. I hope you enjoyed this video. Have a happy trading, and I will see you in the next one.